If you're a fintech geek like me, you'll have heard that embedded finance is the next best thing since sliced bread. It's a huge opportunity for the financial services industry and for fintechs alike, and we're keen to understand what it is, how it works, and why we should care. So let's take a step back and do a quick definition. Embedded finance is really as it says on the tin. It's embedding any kind of financial service like lending or insurance or payments at the point of a customer's need. And so examples of these customer needs could be booking a hotel or trying to buy a house or trying to buy a car. And actually, you could make the argument that embedded finance was invented for car purchases. It was Ford in 1919 that launched the world's first car credit product. If any of you have been in a car dealer at all in your life and been upsold insurance or car financing, you'll know that embedded finance is definitely not new. So what's all the hype about now? Well, e-commerce and digital adoption has been growing for the last 10, 15, 20 years, as we know, and particularly since the pandemic, we're seeing more and more people buy online. Those moments of truth, like buying a car or renting a home, are happening online. But also more interestingly, the technology itself where we use to make these payments are changing. So a great example of this is Apple launching a buy now, pay later solution into the Apple Wallet. So even if you're in a physical retail store, when you tap your Apple Pay, you can spread your payments over installments rather than paying immediately. There's thousands of examples like this across embedded finance, but today what we're really interested to know about is embedding finance into marketplaces. Marketplaces are where buyers and sellers come together, and we can think of the analogy of a street food market with loads of food vans operating inside. Marketplace companies will provide services to those food trucks and think about how to add more food trucks so the business can grow. So, for example, if there are too many salty chips leaving people very thirsty in the market, then maybe bring in more soft drinks vendors. If the food truck that's selling the salty chips in the first place needs funding, they can actually go to the bank, right? They can get a bank loan. But the interesting thing about embedded finance is what if the marketplace can provide that loan? What if the company that is providing all of those other services knows so much about that business and that van that they can just fund the cash flow acquisition in the first place? That is embedded finance in marketplaces. In fact, marketplaces have been experiencing huge growth over the last few years. OC&C predicts that by 2025, spending in marketplaces will equate to roughly 50% of all online spending worldwide, excluding China. This is massive growth. And in fact, actually, a lot of the big tech companies we're used to, like Amazon, Alibaba, Expedia, Uber, Airbnb, the list goes on, are in fact marketplaces. And what's really interesting to financial services is the depth of behavioral data that these marketplaces have about you as a person using it, but also about businesses as well. So they have information that they can derive, like risk appetites, trustworthiness, your identity, your credit history maybe even. And these are all things that a lot of banks and even neobanks don't necessarily have access to. What this really allows them to do is create their own financial services products, sometimes in partnership with banks, or maybe even just on their own. Perhaps the simplest and most interesting example of this is Airbnb's air cover insurance. So Airbnb is a massive platform. They have over 4 million hosts on the platform and about 150 million daily active users, according to their stats from 2018. And this gives them proprietary data that they can use to derive an insurance product. And so air cover is offered to both hosts and to individuals on the platform. But what this actually does is it drives confidence in the use of the platform overall. Any new host coming in will look at that and go, there's insurance here, I feel more confident about hosting on Airbnb. So we've been talking a lot about the big Silicon Valley giants, but actually the best examples double down on underbanked populations in specific niches where businesses are currently unable to get fair access to credit all over the world. And this is such a growing industry, there are hundreds of examples out there, but we just picked 3 that we thought would be the most interesting. There's Glitzy in Mexico. They're a wellness marketplace, so think about booking a massage at home or a blow dry, for example. And they lend to their beauticians to allow them to buy and upgrade their equipment. The second example is Trade Depot. They're an inventory network for small grocery shops across Africa, and they lend to their users to restock their shelves based on the data they have available. The third example, and probably the most well-known, is Grab. They're effectively Southeast Asia's largest super app for food and transport. And what they've been doing for a while now is to offer business loans and insurance to its merchants and to its drivers within the network. So what's powering this? The first thing is that BaaS providers, so banking as a service providers, are getting smarter and more functional. Some have their own banking licenses, which means that they can lend off their own balance sheets, which I think is really interesting to help non-banking companies provide their own financial services products. The second thing is that a lot of the tech out there is just easier to use. So some of them use low-code or even no-code configurations, which means that you can bake in financial services products super quick when you're experimenting and bringing something new to market. In conclusion, what makes these marketplaces particularly good is their use of financial services to help their merchants grow and do even more trade within their platform. It's that killer feature that sticks and binds all of these services together within the marketplace. And I think what we're seeing more and more, and will over the next few years, are marketplaces becoming your bank, your insurer, your accountant, your CRM, and your lawyer, particularly if you're a small business. The first thing to say is profit and stickiness. Helping merchants grow helps the platform grow, which helps with profitability and actually getting your next funding round. But the second and even more important thing is fintech for good. Marketplaces have an incredible hit rate in financial inclusion and helping the underbanked. In Africa, it's estimated that there are roughly 5 million SME retailers alone. So the opportunity is huge, and you can almost guarantee that a lot of these retailers will have access to pretty unfair credit products. It turns out that marketplaces have the potential to lift people up the financial ladder, one food truck at a time.